What's up, everybody, and welcome back to another weekly edition of the All Aboard newsletter. Today, I'm going to talk about something that is important for every single insurance agency owner out there, and it is how to determine what your cost per acquisition should be. Okay, so I've talked a lot about how to find what your cost per acquisition is over the last 2 years, using this newsletter, both in the video and written format. So I think the question that always gets asked is, well, what should my cost per acquisition be? As if it's this kind of like standard number for everybody. But the reality is that the number is different for every single person. And so what I'm going to do today is I'm going to walk you through what your cost per acquisition should be, in my opinion, right? There's a lot of ways to calculate this. There's a lot of ways to do it, but I'll give you some rules of thumb. And then if your numbers are off, how can you go about optimizing your leads? Okay, so I want to tell you guys how to optimize your leads, kind of like in a nutshell. And if it's popular and it's something that you guys want to hear more of, I'll put out like a 40 or 50-minute video of how we optimize our leads at both Next Call Club and Peachy Insurance. And so with that, let's dive in and let's get to it. All right, y'all, let's do it. So one of the things that I want to say here before we get going is that even though at Peachy Insurance and Next Call Club, we are super focused on internet leads as a very high amount of our business, it's a primary source of new business for us. This is not only about optimizing internet leads. It's about optimizing any type of marketing where you have ability to target and filter. So I'm talking about things like internet leads, live transfers, inbounds, Google calls, direct mail, any type of marketing where you can choose who you want to deliver that marketing to. This is going to be valuable. Okay. And I think part of this is about getting data and understanding the data that you have. So again, if you are spending a bunch of money on marketing and you're not doing anything to log your quotes and understand what your data is, you are going to be unable to actually optimize anything. So part of it is about having a CRM and having a place where you track your quotes, your sales, what's happening on those quotes and sales, so on and so forth. Okay. Now, this might not be super helpful for you if you are just very active in your community or if you are very referral based. Now, you don't have a lot of options when it comes to targeting those people. However, you might be able to say, well, if I have 10 lenders who send me business, the close rate on this lender versus this lender is very different. Okay. So you can still use this framework no matter what type of marketing you have, but depending what type of marketing and what levers you have to pull, it might be more or less effective for you. Okay. So let's optimize that marketing. Let's lock in that cost per acquisition. So let's start by saying, what should my cost per acquisition, what should my cost per sale be? And the reality here is that I get asked this question all the time. Say, what should it be? And the answer is, well, it depends on like a few things, right? But more than anything, it just kind of comes down to math and what your goals are. So the question is, what should it be? Well, the answer is that it will be different for everybody. And it's not as simple as just saying, it should be $500 or $300 or $800. And I think sometimes we hear that so-and-so in another state has a cost per sale of 300 and I have a cost per sale of 700. So I'm pissed, right? Like, okay, well, that's, 2.5 times what it should be. Well, not necessarily, because there's geographic differences. Maybe my premiums are higher, or maybe I'm spending less money in other parts of my business and I can withstand a higher cost per sale. I've got some friends here in Georgia, who spend, 3 to 4 times the cost per lead and have a way higher cost per acquisition on their marketing spend, but they have way less operational costs than I do. And so at the end of the day, if they're hitting their goals, it's all good. So this number will be different for everybody. Okay. Now, some rules of thumb that I like to share is like, I think a good target, not necessarily like an end all be all. If you're not at this number, you should cancel everything. But I think a good target in most of the country where the average premium per item is in like the 750 to 750 to 1,000 or 1,100 range is like $400 to $450 cost per sale. Okay. And this is, based on all state numbers, because that's, the carrier that I represent. If you're a farmer's agent, and maybe you can withstand 350 or 375. If you're a state farm agent or an independent, or maybe the new business comp is lower, maybe it needs to be lower than that. And I'll show you kind of the math here to get to your own number. But the rules of thumb, right, is like if you're in most of the country, 400 to 450 is pretty safe. If you're in that number, you probably have a pretty good shot to have a very long-term profitable life with that customer. If you're in like Oklahoma, Arkansas, Louisiana, Texas, Colorado, some of those kind of like plain states where there's really high premiums, 600 to 750 is not crazy, like at all. In some cases, you can take over $1,000 cost per sale and it can still make sense. Okay. So let's think about how do you actually figure out this number? Well, there's a simple mathematical approach that you can take. It's not perfect. That's why it's called simple, but it kind of looks like this. And I can send this to you. It's just like a super basic, like Excel file. uh, it's nothing crazy, but if you think it would help, just reach out and I'll send it to you. But basically, this idea is we can say here, like, okay, well, like, what's the max percentage of the year one cash I'm willing to spend? So if we say, all right, I'm willing to spend 60% of the cash I get paid in the first year for a sale. Well, we say, okay, well, my premium per item is 1,050, and I average 3.1 items per bind. Maybe it's 2.1 autos on average in a home or a renter's or a condo or whatever. And my commission rate's 25% on new business. Well, then my target cost per sale is $488, right? That is a simple, easy way to do it. If you're trying to run leaner, maybe you want to spend only 40%. If you are fine, just kind of breaking even, you can go to 100%, and this number might be 600, 625. So the overall economics of your business are going to matter when thinking about this number, but it's just kind of like a quick, easy rule of thumb as like a gut check. Okay. Now there is a much more advanced approach, right? And this is something that we do for Peachy Insurance, and it's something that we can do for you if you're looking for analytics or advice or anything like that. Through our consulting program, but we can actually create some LTV, which is lifetime value, or cash-based cost per acquisition targets, or bid models for internet leads or live transfers or whatever. And so, what you can see up here in this really poorly circled area is that maybe I don't want to spend more than 20% of the lifetime value ever to acquire this customer, maybe 40% of cash, right? So you can see these two columns that are now highlighted in yellow here. And you can see that if I have somebody who I feel confident I can get a multi-car, a home, and a flood, well, based on this 20% rule of LTV, I can spend $1,500 to acquire this customer. On cash, I can spend $852, which is significantly higher than the $488 that I talked about. Why? Well, the premiums are higher, the retention's better, and they're ultimately going to stick around longer. And so I like to use 20% of LTV as a max because I want to make sure that my LTV to customer acquisition cost ratio is no less than 5 to 1. If you are at 5 to 1 on LTV to cost per acquisition, you have an extremely scalable model that you can go for. Okay. If you're less than that, well, you might be churning too much or you're spending too much to acquire. Okay. And so think about it this way. Now let's go down to a single car renter or even like a single car mobile home. Okay. So look, I should only be willing to spend $294 to get a single car renter. Why? Well, for one, renters have very low premium on the renter's policy, where a home you might get $2,000 in premium, a renter's might be $200. Yeah, the auto is a higher premium, but it retains in the 70%, maybe even the 60%. So because the lifetime value is low, we want to spend significantly less to acquire it. Okay. So something like this type of analysis can be really, really helpful when thinking about like, what should I target? What should I spend to acquire it? These are my numbers from last year. These numbers have changed. My retention's dropped a lot. So my cost per acquisition targets have dropped a lot too, which is hard because the cost per leads and mail and live transfers and calls and everything else is going up and rates are getting tougher. So close is going down. So we're very much compressed here, but we got to find ways to win, which is why you've heard me talk about driving referrals and doing things locally with partnerships and all these other types of things. Because if we go deeper into a household, if we get a referral, if we're getting, stuff from our community, that is going to allow us to withstand a higher cost per sale on marketing, because overall these things are pulling the cost down when we lump all of our sources in together. Okay. So this is an advanced mathematical approach. It's not necessarily simple, but it can be built. And it's something that we update every single quarter to make sure we are acquiring business at a profitable rate in the long run. Okay. So let's talk about like where to focus. Let's think about actual optimization here. Okay. So you can see like this is an example of one of my lead campaigns. All right. So in the last 90 days, we've bought 804 leads. This column here is kind of cut off, got too much going on, but this is quote rate, 23% quote rate. Okay. Which is amazing. And ROI is negative, not amazing. Opportunity close or quote to close is only 4%, also trash. And lead close is 0.9. Okay. So how do we know if these are good or not? Well, we got a benchmark. So if I look at my entire lead kind of bucket of everything I've bought in the last 90 days, I've bought 14,841 leads in the state of Georgia. We have a 20% quote rate. So in this case, we are actually above average on quote rate. That's great. These are people who want to talk. It's locked in. Quality's good. But look at lead close, 0.9% on this one versus 1.63 over here. And then if we look at, the lead close, it's not enough to tell us what's going on. So if I look and see that it's 0.9, why is it 0.9? Okay. It's not enough. It's too broad. So we got to dig into the next level. So if we look here and we say quote rate, all right, quote rate's great. If quote rate was bad, I might say, well, maybe the source, like the vendor in which I'm getting it from, or like the ultimate landing page or publisher that it's coming from, like up the stream, right? And I think for y'all out there, right, like you might say, I buy from Next Call Club, I buy from EverQuote, I buy from Smart Financial, I buy from Media Alpha, all great partners of ours at Next Call Club and Peachy, EverQuote, Smart Financial, Media Alpha. We love them. They're great. We have nothing but good things to say, even though we are in competition with them. So I would say like this, right? Have multiple providers and look at the quote rate across them, because if the quote rate is low, well, maybe the source is the problem. Maybe it's like the quality of the traffic that they're sending you, because if there is a company that sends you 100 leads, well, those might come from like 10 or 11 different like kind of back end sources for them. And maybe there's different types of forms, right? There's different types of intent. One of the things I talk about a lot is that home leads tend to quote at a lower rate than auto. Why? I think one, there's more competition, but second, it's a shorter form. That's just one of the reasons. If you're not filling out as many things on the form, you might not have as much intent. Okay. So if your quote rate's bad, look there. In this case, the quote rate's really good, but when we actually go to quote them, we're not closing them. Our overall quote to close is around 9%, by the way. So this is actually worse because we're doing a ton of quotes, 181 quotes, and we've only sold 7. So we're wasting a ton of time. So quote to close, why is that low? All right, well, that could be targeting, that could be filtering, and that could just be the ability of the team to close. And so again, right, if we think about quote to close is around 9% on average, well, that's probably not the team closing them, because we know that overall it's much higher, okay? But if it's really bad across the board, well, that could be your team closing poorly. But it could also be filtering, right? Like, are we accepting claims? Are we not? What's the age of the types of people? What's the square footage of the home? What's the years of the vehicle, the year, make, and model? Do they have a young driver? Do they not have a young driver? What's their prior carrier? All of these things can impact competitiveness. In this case, targeting geographically is called All Georgia 2 Cities ASC. And the reason I called it that was because I looked at what are the cities with the best close rate since we got ASC in September last year. Well, something's off here, because I took literally our best cities and we're not closing them, okay? So there might be nuance. So we might say, okay, well, the cities are great, but now that I'm targeting everybody in those cities, well, maybe there's something else happening here. An example of this is that we were doing really well against Geico. This is like sometime last year. So I opened up a campaign that targeted only Geico, and we were getting crushed. And I said, what's going on? So I started taking a look, and we were either competitive or ineligible. So I had to figure out why they were ineligible, make some filter changes, and we locked in. It became one of our best campaigns. Okay. The last thing to think about here is ROI. Everybody has different goals, right? You might be trying to maximize how many items in the sales you get. So you might be optimizing for quote rate, or you might be optimizing for quote to close. I optimize for profitability. I would like to see my ROI be at 80 to 120%. And so really the things that we have to think about here is, how do we improve the close rate or get the cost per lead down? In this case, I'm at about $5.50 a lead on average in this campaign. I really don't think, I think if I try to go cheaper, I'm not going to get any volume. So I've got to figure out the targeting here. So again, I can try to buy leads at $3, but the traffic that comes with it might be poor. I might not win any volume at all. So like, I need to figure out the close rate with it. So this is the way to think about it, right? Is like, okay, it's not enough to say ROI or lead close or quote rate. We got to look at all of these things together and try to figure out why we're not getting the results that we need. Okay. There's an art to this. You don't have to be a data wizard to do this, but you do have to have the data to pull from to check this stuff out. Okay. And again, if you're feeling lost, just like reply to the email and let me know, and I'll give you some direction. And I think if you're not tracking your quotes today, like, use something like the Humble 100. Super basic and simple, has a lot of really cool tools, but it's not, overdeveloped where your team is going to feel confused or bogged down by using it. Okay. So it's just something to think about and something to add in if you don't have anything like that. All right. So here's a quick warning on sample sizes. I hear this quote all the time. Well, I haven't sold anything in that zip code, so I cut it. and we look at the data and they have like 10 leads in that zip code over the course of 3 months. Well, the problem with that is that if you sold one of those leads, it would probably be your best zip code. So there's something to be said here about sample sizes, okay? And sample sizes basically tell us how many leads do we need in an area with a quote to know with confidence that the numbers that we have are pretty reliable. And we don't have to lock in so hard on this, but it just kind of gives perspective. So if I have 100 leads and I want to be 80% confident in the results, well, I need to have 63 quotes. And so the bigger the sample gets, the more confident you can be. So this is just from SurveyMonkey. You can go to Google, type in SurveyMonkey sample size calculator. If you buy 1,000 leads per month, you can say put 1,000 in. I want to be 80% confident. What's my sample size? So again, I'm not saying you need to have 63 quotes in a zip code to cut it, but it does give some perspective. If you're cutting things without an adequate sample, you might be cutting your best zip code and you might not even know it because a sale just hasn't happened yet because you just haven't had enough shots on goal, right? There's a law of large numbers kind of happening here. So let's drive this bad boy home. Always love when we see the Sandman here. How do you win? How do you win? Well, one, check your data at least monthly. Some people check this stuff daily or weekly, right? I don't think you should make a change to your data weekly or month or weekly, daily, maybe not even monthly, but you should be looking at it, updating it, keeping a finger on the pulse of where you're at. Okay. Second is like meet with your vendor partners at least quarterly, ideally every single month. I promise you, every single vendor that you work with wants to meet with you, wants to talk about what's going on, wants to figure out how we get you better results. Because if your vendors can get you better results, you continue to buy, you refer people, you say nice things, right? Like there's this narrative out there by some people who say, oh man, like lead companies are criminals and they want to sign you up and give you the best things, or this mail was good at first and then they gave me the junk. Yeah, maybe there's a couple bad actors out there that do shady things, because of course there are. But I know a lot of people in like mail and leads and calls, and I've been in all states, environment for like 12 years now. And I was at State Farm before that. Most people want you to succeed and they try to do things the right way. And I think that by demonizing them, you're just hurting yourself really at the end of the day. So meet with them and give them an opportunity to find what's working so you can get more of it, find what's not working so you can get less of it. Okay. And if you have an account rep that doesn't do this with you, ask for a new account rep, because it's like the bare minimum they can do as your account rep. Okay. They're not there to answer a question, they're there to be your rep. Third, give 90 days for any changes to bake in. We have sales cycles. We know that sometimes we talk to somebody and they bind 2 months later. Okay. So if you're changing things over 1 week or 2 weeks, you're just being impulsive. Like I've been this way, like when things are hard or you're down, you want to start changing everything, because action is like a great way to beat anxiety. I get it, but you gotta be patient. I heard Gary Vee say this is like being patient is not the same thing as being complacent. It's not the same thing. You've got to be patient. Good things take time. It doesn't mean you rest on your laurels. It doesn't mean that if something is, burning a ton of cash, you do nothing. But check in, ask what you can do, look for leading indicators, okay? And last, know the game you're playing. I talked about it before. I'm optimizing for ROI. There's agents out there that we work with that are optimizing for the most items possible because they're chasing a bonus. There's other people saying like, look, you know what? I'm willing to overpay for this lead because it's such a good experience for my reps that it's worth it, okay? So there's all types of games we're playing. I hope this was helpful. It was high level. Again, if you want me to go like in depth, 40, 50 minutes, you think that would be valuable of how exactly how we optimize down to like the city, the zip, the age, everything in depth. Happy to make a video and share that. Just let me know if that's interesting to you before I do it. And we'll go from there. Until next week, as always, thank you so much. Let us know if you need anything. We'll talk soon.